Hi everyone, no major news today, so let's get straight into the data. And then we'll go through all the normal charts as well as my accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So starting off with the Fear and Greed Index, you can see we were at a 77. A week ago we were at 70, so we've actually ticked higher. So let's look at that on the chart here. You can see we had a bit of a double bottom, rallied back up into the same range, back into extreme greed, market momentum, extreme greed, and then strength and breadth continue to sit in regular greed. They've pulled back pretty significantly, with breadth pulling back even more than strength, and then put call ratio continues to be in extreme greed. We'll look at that chart later as well. And then you can see volatility did tick up again from that bottom that we have seen. You can see about 3 or 4 bottoms in that same area. We'll look at that chart as well. And then safe haven demand and junk bond demand continue to sit in extreme greed. Bonds are just not projecting a lot of market weakness, and they're not demanding those same premiums. Moving over to sentiment on the AAII survey, you can see we did tick down slightly from last week's read of a 40. Neutral continues to expand from the previous read, and then bears actually ticked a little bit lower. So we have bears ticking lower as well as bulls ticking lower, and people are starting to neutralize at current levels. Does make sense to me. I would probably be in the bearish camp, but in the very short term, I would be neutral. Remember, this projects out 6 months from now. If I had to guess, I would say we'd be lower 6 months from now than we are right now, but in the very short term, like I said, neutral makes sense. Moving over to seasonality, you can see we have moved into this area where we are expecting some weakness. Trading days 19 and 20 are supposed to be pretty decently down. And then we kind of bottom out on 20 and see a little bit of a rally into the 21st. That would be a rally from Tuesday into Wednesday of next week. And then moving over to the February calendar, first time we're talking about February, we will see that on Thursday. You can see it's pretty flat here for the first couple of days. Slight rally on that first day up to about 0.5%, and then you can see we get up to about 1% on the 27th and 28th, and then the Nasdaq tends to take off here from that point until the end of the month, with a couple of rallies and dips through the last week of the month. And you can see the Russell 2000 continues to remain strong during that period, whereas everything else is generally flat, if not down on the month. You can see S&P 500 as well as the Dow and the Russell 1000 are all expected to be negative on the month, which is pretty interesting, all finishing down around that negative 0.5% for February. And then looking at probabilities by week, you can see bullish days just about every single day for the first 2 weeks, except for that Monday, the 5th. And then even the following week, 12 through 16, pretty bullish, and that's your options expiration. And then after that, it is bearish just about the rest of the week. After President's Day, bearish all week, definitely interesting. And then the last day of the month expected to be bearish. Moving over to earnings, we have a massive earnings week. Pretty light on the Monday, nothing major there, but Tuesday, huge here. We have Microsoft, Google, AMD, Pfizer, UPS, Starbucks, Marathon Petroleum, Cisco, all reporting here on that Tuesday session. So Tuesday after hours, expect some fireworks from Microsoft as well as Google. And I'm really concerned about AMD. They have had a massive run. And now with what we're seeing from Intel, that could be quite weak. I did do a video on semis and Intel, and I do think there is potential for weakness after their earnings announcement. And then looking at Wednesday, you have MasterCard, Qualcomm, Boeing. I think that'll be interesting to see what they say on their earnings. I did see that the 737 MAX 9 was cleared to start flights again, so that's interesting. We'll see if that helps the stock on the Monday session. And then looking at Thursday, it does not slow down at all. You have Apple, Amazon, Merck, Honeywell, Altria, all reporting on that Thursday session, with Apple and Amazon being after hours. So potential volatility there after hours. And then Friday, you have ExxonMobil, AbbVie, Chevron, Bristol Myers, all reporting pre-market. Probably not going to have the same massive effect as everything else, but ExxonMobil, still a pretty large company at over $400 billion in market cap. And then looking at the economic calendar, it does not slow down on the economic side. Tuesday, we have consumer confidence, JOLTS job openings at 10 o'clock. And then looking at Wednesday, we have the FOMC meeting. absolutely going to affect markets. That comes out at 1400 with the FOMC statement, as well as the rate decision. It is expected to be a pause, and then the conference, always some hype around the conference and what they're going to say, especially with the news that they gave us last time of 3 potential cuts coming this year. And then looking at Thursday, we got CPI for the Eurozone, fairly interesting. And then global US non-manufacturing PMI at 945. Expected to stay just barely above that 50 line, so economic data, fairly interesting. And then ISM, manufacturing PMI and manufacturing prices, that is below the 50 line, expected at 10 o'clock on Thursday. And then Friday, we get all of the big jobs data. That's going to be interesting as well. We have non-farm payrolls, unemployment rate, all coming out at 8:30, so tons and tons of data. And then don't forget the Michigan numbers at 10 o'clock regarding inflation, consumer confidence, and consumer sentiment. So all fairly interesting, massive news and massive earnings coming out this week, and I do expect some volatility. Moving over to Max Pain. Max Pain is currently at 480. You can see all of those puts there, 480 up at 58,000. Almost a million options already in the market. Almost all of those are puts. 3.02, super high on the put call ratio. My guess is that these are all insurance puts, and I was actually thinking about buying maybe 1 or 2 of these to protect my positions as well. Insurance right now for the week is actually quite cheap. Surprisingly, it's about 1% or a little bit cheaper than 1% for the at the money puts for the NASDAQ. And that's with all the major players reporting earnings, as well as the FOMC and all the jobs data. I just can't imagine we're not going to see at least one point in time where we are down more than 1% on the week. It just seems impossible, especially with the seasonality over the next 2 trading days. Moving over to the charts, starting off with the S&Ps here on the weekly chart. You can see we did get all the way to that level, so we hit the trend here. This is the same trend that marked the bottoms here in August before we had that bounce, and then the peaks here in November as well as February of 22 and then 23. Marked the peak here in June of 23, overthrew it slightly before breaking down here to the low of October. And then since then, we've touched this trend line here, which marked the bottom in October of 22, March of 23, and then again here in October of 23. And now we are back at that peak trend line in January of 24. So we've hit the resistance. We'll see what happens now. Certainly interesting. This is a critical point going into all of the data and all of the jobs reports, as well as the FOMC and earnings. So very critical here. You can see last time we hit this point, we pulled back pretty dramatically. That ended up being a dip of about 10% from top to bottom. So if we get that again, that would give us down to around 4,400 from here, which would make sense. That would give you the lows from August of 23. Some of these peaks here in June of 23 would be a pretty decent pullback, but it would still be a higher low setup from this previous low. Momentum continues to be bullish. We did hit overbought conditions on the weekly chart for the first time going back to July of last year. And last time we hit overbought conditions, obviously that was the turning point. So it is worth noting there is a lot of resistance at current levels. Everything still looks bullish. Momentum and RSI, everything still looks bullish, but we're at a critical turning point. Can we keep up this run? Just seems unlikely in my opinion. Moving over to the daily chart, you can see we did have a couple of strong days there, and then we had 2 dojis in a row, and we were actually slightly down on the Friday session. I went ahead and added a level here, 48.68. That is the wick highs, and then on momentum, you can see we did get a step down on that Friday session, step down on RSI as well. So it seems like we might get a little bit of a pullback down to the 9 EMA, currently trading at 481.70. That's just below my level here at 482.75. So a little bit extended, definitely makes sense, and we're going into all of that data, so it seems like we're going to see a little bit of volatility, which is part of the reason I'm surprised that the put options are so cheap for this week. Moving over to the NASDAQ, similar thesis, hit that trend just to the penny, 17,615, touched it and then pulled back. So that is a critical, very important trend line. That is a longer term trend line here as well. So you can see going really far back. That is the trend line that marks the tops going back here in April of 19, as well as July of 19, marked the top here in August of 22, and then it marks a lot of tops and bottoms if you go further back in price. So very, very important trend line. We did touch it. I would expect sellers to be coming in at that level. Again, similar to the SPY, you do have bullish momentum, bullish RSI, and it actually did get just above that trend line here on the RSI. I've been watching some divergence, did just barely get above it. You can see Let's go ahead and look at that just a little bit. You can see I was watching that divergence, got just above it barely. If it breaks back below it, it could still be intact, just a slight overthrow, but worth watching. Critical point, got a doji on the week, 0.62 to the upside. We'll see if it pulls back from there going into all of the data. Moving over to the daily chart, you can see 2 strong days in a row on Wednesday and Thursday, and then that bigger move down on Friday, down 0.6%. Did end up getting through my 425.30 level down to 423.81. Next support for me, 421.92. That is the lows here from that Monday session. Held it here on Tuesday. So remember, all of these levels are relatively new. This is an all-time high for the NASDAQ. You do also have this trend line that marked a lot of tops and bottoms here throughout December. We did almost touch it again on that 23 January day, and then we're getting closer to it here. And then the 9 EMA sitting at 419.12, which is kind of in the middle of this range. Again, remember there's no levels in here. This is all-time highs. And then momentum, step down, RSI, step down. Looks quite bearish going into that Monday session. Moving over to the Russell on the weekly chart, obviously very different chart. You can see we've been just chopping in the same zone between 164 and basically 200 for a while. We did overthrow it slightly on this most recent peak, got all the way up to 204, dipped low, held the 200, rallied up. So the week was positive, 1.84, almost got to my 198.75 level. Momentum continues to fade. RSI did step up a little bit, so you could argue low, higher low, as long as you kind of rally through, make a new high. That could be something that we see there. And then looking at the daily chart, you can see we did get a little bit of weakness on that Tuesday and Wednesday session, 2 inside candles from that Wednesday session, and then we're waiting to see what happens. So we're sitting above all the EMAs and SMAs on the daily chart, continuing to hold 195.15, holding that highly traded zone. If we break from this consolidation to the downside, then you're going to be looking for a lower low, potentially down to that 183 area. But if we break higher, then you're looking for a higher high from this previous peak, potentially into that 208 to 212 area. So critical point going into all of the data. Moving over to the Dow, got another bullish week, broke out last week, continued higher this week. RSI overbought on the weekly chart. Momentum continues to roll over. Got another step down on momentum, but price action continues higher. 181.09 was the weekly close. No levels in this zone. Everything continues to look bullish. Let's look at it on the daily chart. You can see we had a bit of a consolidation. Like I said, we broke out here on that Friday session, the 19th, continued higher, and then we did close higher on the Friday session. So continues to look strong. The Dow probably looking the strongest technically versus all of the others. Moving over to the equal weighted S&Ps here on the weekly chart. Similar thesis to the Dow and the Russell with momentum continues to roll over. We did see a step higher on RSI. We're still in this tight consolidation. We had a low test, held it, rallied up this week about 1%. So definitely in consolidation, waiting for some clear direction. Didn't quite get to these peak highs going back to March of 22. That would be 160.31 for your upside if this short-term resistance at 158.72 breaks. But if we break down from 155.79 or that 154.64 level, then you're going to be looking for a little bit more downside, potentially into this cluster of EMAs down around 147, 148. So very interesting, continues to hold consolidation, waiting for clear direction on the equal weighted S&Ps. Moving over to the ratios, starting off with the SPY Russell and NASDAQ SPY, you can see we did see a little bit of Russell outperformance finally. We had 4 weeks in a row of SPY outperformance, then we got an inside candle, a little bit of a down move. Momentum says this should continue higher, but at this point it honestly would not shock me if we saw a little bit of a pullback. Kind of looks like we're getting to a wedge type formation. You can see kind of some tops here, some bottoms here, potentially get a little bit of sideways action, certainly possible. RSI did roll over a little bit, so makes sense with seasonality, seeing a little bit of Russell strength. And then NASDAQ did pull back slightly after breaking to an all-time high here on this ratio. So in terms of structure, still NASDAQ outperformance, but it did underperform a little bit at the end of the week. And I think that's mainly due to what we saw on Intel as well as Tesla. Moving over to SPY divided by the M2 money supply, you can see we are currently in this rising wedge. It is continuing to narrow. We are getting to the upper range of that trend line. Makes sense. We saw we were getting to trend line resistance on the SPX and also on this chart. You can see it here. It does say we have a little bit more upside. Marks the top here in July, marks the top here in August of 22. So you have a little bit of room, but not much. And then once it breaks down from this level, there could be a lot of downside. We've been talking about that 2205 level as a critical one. Did mark the pre-COVID high as well as the previous all-time high here in December of 21 before we had that more significant breakdown. And if this breaks below that level, then you would expect to pull back to more normalized ranges between that 17 and 19 area where we traded for a very long time. You can see here we got there in October of 2013, traded in that same range all the way up until this most recent breakout in December of 23. Moving over to Apple and Tesla on the weekly charts. Apple up 0.48%, so very, very small. It is above all the EMAs and SMAs on the weekly chart, but look at that wick rejection through a wick all the way up to around 196. Ended up closing below that 194 level, and then you would expect a little bit of pullback. Momentum basically zero. You can look at it on the daily chart. You can see 4 days in a row of bearish price action, clear rejection, and you would expect at least a move down to 190 makes sense. You can see momentum rolling over on the daily chart. And then looking at Tesla, we've been talking about it all week. Massive bear week, 13.64% ultimately on the week. And you can see it's been a big move already. We've had 5 weeks in a row of straight down price action. The question is what happens now? Are we going to continue lower? 177.70 is my next level. And then you got 167.34. And then let's go ahead and add a level right at those wick lows from this previous dip. That would be around 152.30. So certainly possible. You can see this most recent dip low got all the way down to almost $100 a share before rallying up to almost $300. And now we have underperformed markets continue to sell off, and it does look quite weak. Moving over to Intel and AMD, you can see Intel had a massive run. Big bearish week, down almost 10%, 9.35. It did close below my 44 level. Next area of support is down around 41.20 with the 144 and 21 EMAs. And then you have 38.40. Certainly possible it could get into that zone. Momentum rolling bearish, RSI rolling bearish, massive volume, clear rejection at a critical level. Makes sense for it to go lower. And I did do a separate video on Intel, so check that out if you're interested. But the reason I'm bringing it up here is the fact that if Intel is giving up this much price action in just 1 week, going into AMD earnings this week, it's obviously had a massive run from around $93 up to around $183. So about 100% gain over the last few months. And now we're clearly at wick highs, super extended. This is an all-time high here for AMD. Let's go ahead and zoom in a little bit, give you a little bit better perspective. You can see clearly an all-time high, massive breakout, had a huge week on 16 January, up almost 19% on that candle. So massive run. It's been super strong. And if they just can't deliver, or they even give a slightly hesitant guidance, I would just imagine that this is going to pull back potentially down to the 21 EMA, which is trading all the way down around 124. So you could be looking at a pretty decent loss here if this pulls back to even more normalized ranges at all. So similar to what we saw here, rallied from about 82 all the way up to 130, and then pulled all the way back here to about 94 before this most recent run. So certainly possible. It's done it before, absolutely. Let's go ahead and extend out these trend lines, see if there's anything interesting in those. So this trend line makes a little bit of sense. That one goes to the lows, marks a bit of consolidation here, and then we did wick it on this most recent run. So definitely trapped in between this kind of layering of trend lines. We'll see if it can break higher or lower. It's kind of trapped, like I said, but momentum bullish, RSI still bullish going into earnings. And then going over to Microsoft and Google, since they do have earnings this week, you can see Microsoft has been on a massive run, absolutely colossal, down from around 218 all the way up to 400, so more than 100% gain from October of 22 to current levels, basically straight up, slight consolidation here in June and August before breaking out higher. Massive, massive run, all-time highs. Microsoft tends to deliver on earnings, not super worried about it, but obviously the valuation is very high. So now the largest company in the world with a $3 trillion market cap. And then Google also at all-time highs, breaking above that level here this week. So just got into all-time highs. Momentum bullish, RSI bullish. Again, these companies have to justify these levels of price action with their earnings this week. Otherwise, we could definitely see sell-offs. Moving over to staples and discretionaries. Staple turned a positive week, 0.8%, closed above 72.50. Not quite a recent high. That's going back to 8 January. Momentum basically flat. RSI still looks okay. Volume on that candle was quite good though. So right now, this looks a little bit more bullish to me. and then discretionaries continues to pull back down 1.84%, and that is on the back of Tesla hit VWAP on the weekly chart. A little bit more interesting here. Let's go ahead and take a look at it. You can see we did get to a higher high, had a slight consolidation and then broke lower. Tested that level, 170.68, ended up holding, tested VWAP, momentum rolling over, RSI breaking below the SMA. Everything to me says that discretionaries are probably headed lower over the next couple of weeks. In terms of price targets, you got the 200 sitting down at 160.36. That could be an opportunity over the next few weeks to get into that zone. You can see we've had moves like this where you kind of consolidate, dip low, have a slight retrace rally, and then you get that bigger follow through. So that's kind of where we're at now. Momentum kind of in this consolidation, holding for a few weeks, and then I'm expecting that bigger dip low into that range, and then we'll see what happens from there. Moving over to oil and gas and energy, I continue to talk about these as opportunities. They have been quite weak. You can see we've been in this kind of medium-term downtrend, but this week was very strong, 4.38% on oil and gas, 5% on energy, so massive weeks. I hesitated, should have bought in, didn't, so now I'll be watching this early next week, and you can see these going to have some strong runs. We had a move like this going into July, 5.4% on both of these, and they ended up rallying quite aggressively to much higher highs over the next few weeks, so something to watch. Seems like these are probably going to come back into favor a little bit over the next week to several months, in my opinion. Moving over to transports and financials. Transports continue to hold in the same range. They did dip lower slightly, hold the trend, and then move back into the same range. The interesting thing here is that transports continue to hold in this range while the Dow is breaking out. Clear divergence between the Dow and transports. Typically, you want them to move together if it's going to hold, but right now, transports consolidating, looking for a dip low from this most recent high, while the Dow is breaking out. And then looking at financials, you can see we had a very long consolidation. We did break above that, retest it, and then rally through. The breakout continued this week. Momentum fading slightly, and then RSI hitting overbought conditions. But right now, broke above 38.30. You can use that level as a potential trade marker, and then look for these most recent highs up around 41.65 as your price target. It's above the highly traded zone. Does seem like financials are a bit of an opportunity at current levels, as long as this breakout continues. Moving over to 20 and 50-day breadth, you can see we did get a dip low, rallied off of that wick. So 20-day average does look slightly bullish. It's at the trend resistance, but it did get back above 51.75, so you'd look for a move back into this consolidation. Might get a couple more days of bullishness there based on this weekly trend, and then momentum on the 50-day average continues to roll over. This has taken a long time. Usually it doesn't do this. You can see in these most recent rollovers, it does roll down at least to neutral, and then you get the continuation. So I still think it's going to do it eventually. It's just taken a long time. So just be patient. It's likely to go lower eventually, and maybe all of the catalysts this week is what markets are waiting for. And then moving over to 200-day breadth, this one is a little bit less clear. You can see on these momentums, it usually does kind of take a while. You might have reversions and rolls. It just kind of depends. So right now we're continuing towards bearish. Absolutely could just kind of roll through that level, get back into this more normal range around 55. And that typically does happen off of this 76 level that we hit. You can see it here. You can see we got in that same zone here, ultimately had bigger moves lower. So critical point, rolling down, just got to be patient on it. Sometimes it takes a while, similar to here. So we had 4 weeks of roll consolidation and then that bigger move. Right now we've had 3 weeks of roll kind of consolidation, waiting to see what happens this week. If it comes from that FOMC statement and all of the earnings, certainly seems like a good and logical reason. Moving over to the put call ratio here on the overall markets, you can see still in the middle of the range, did get all the way down to 0.6 for a moment, which is pretty bullish. Not a lot of puts in the market at that range. You can see we did that on the Friday session, got pretty close to it on the Tuesday session as well. Nothing crazy here, kind of in that same range that we've been in, slightly bullish. Again, gives you some opportunity for some insurance this week, in my opinion. Moving over to the dollar on the hourly and the weekly chart, you can see hourly chart consolidation, still holding the 21 EMA, slightly bullish. And then looking at that weekly, similar thesis. We've been in this kind of uptrend. It does seem to be slowing down at that 103.64 level, but momentum pretty convincingly still to the upside. We're still on that swing. You can see that here. So we've rolled down, clearly moving higher. The steps are pretty consistent. So still looks okay there. I would expect more bullishness on the dollar. Maybe give you a price target up around this trend line. That would be right in the same range as that 105.50 level. which was the low of this consolidation before we had that breakdown. So certainly makes sense. 104.4 and then 105.5 as those next upside levels. Overall, still bullish on the dollar. Moving over to JNK and TLT. JNK continues to be in this consolidation. We talked about it in the Friday video. Weekly momentum is fading a little bit, so still in a consolidation right at resistance. Does make sense for it to kind of break lower at some point, especially with yields going higher. We haven't really seen it yet. Potentially this week is maybe when we see it. And then looking at TLT, continues to look bearish. We talked about this rally up, hit resistance, broke down from there. It's at VWAP, held that level. It's at the highly traded zone as well, 93.78. 21 EMA sitting down at 91.79. And then if that level breaks, then you're looking to these previous consolidation lows at $83. So TLT, momentum bearish, RSI at a critical point right at that SMA. If this breaks, looks even more bearish to me. Might see a bit of a period of time in this area where people are consolidating. You can see still tons of volume in this zone, which is at a very low price here for TLT. This was up around 170 during its peaks. It's been hovering between $83 and $100 for several months at this point. Moving over to the VIX, we've been talking about this price action for a while. You can see every time we get into this 1230 level, we hold that and then rally up and make a new higher high relative to this most recent high. We hit that again on Wednesday, bounced for 2 days, slight pullback, holding the 21. You would expect this to continue up into that 16 area. So looking for a little bit of bearishness. Also makes sense that we would see a spike in volatility with all of the news and earnings and FOMC this week. So could see a spike in volatility. Does make sense going into all of those events. Looking at the weekly chart, you can see not super convincing, just kind of looks like a consolidation in this area, but momentum continues to roll towards bullish pretty convincingly every single week at this point. We also saw RSI get above the SMA on the weekly chart, and that is typically not good when you see that on the VIX. You can see we got that here, ended up seeing some pretty significant rallies, held above it, tested it, and then got another even higher rally. That pushed us all the way up into that 22 range. Don't know necessarily if we're going to see that level of peak, but it's certainly possible, and you do have to factor in that probability. Moving over to my accounts, I really didn't make very many adjustments this week. You can see still have that 191 covered call. Gives me a price target of around 201 for max profit around mid-March. And then looking at the Qs, still have my 2 covered calls here, really far dated out to 61 days. I really considered rolling those down this week. I'm probably going to do that this week. We'll see how it plays out. Either way, we'll see. Still have lots of credit on those. They're in profit right now. You can see $630 and $528 on those positions. So there's plenty of profit, plenty of protection left in there. Current trade prices for those is $27.30 and $22.68. So barely dipped into that profit at all. Plenty of protection going into this week. And I'm considering getting a little bit more, potentially even buying some put options to protect these shares for this week. Like I said, the credits are not very expensive, which is interesting. We'll look at it after this. And then looking at my TQQQs down to $54 for $2.81. Only in $36 profit there, so about $2.50 left on that position. And it's currently in a $366 profit, bought at around $51.65. So still good there, makes sense, trying to make a little bit of money on both of those positions. See how it plays out this week. And then looking at the options chain, just to give you an idea of what I was talking about, the end of the week is to February, 6 days from now. And you can see at the money was about $4 or about 1% of the total price. And it just seems impossible that we're not going to see at least a 1% move in the NASDAQ. At least at some point, it does seem like that's going to happen, especially with all of the news and all of the earnings and the FOMC. Just seems like we're going to see volatility. Either way, I expect volatility to go higher, which should increase options price regardless of direction. So something to keep an eye on. I'll probably be looking at these positions on the Monday session. We'll see how it plays out. Let me know down in the comment section what you think of all of the news and earnings coming out this week. What is your directional bias with all of that information? Otherwise, definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.